What is going on, guys? How's it going? Sorry for the low quality headset. As you guys know, I am in Denver, so I don't have my setup that's at actually home. So I got the AirPods on, so we'll just make do. But I wanted to go live with you guys just to show you what I'm thinking. And most of all, like what in the world happened with the market this week? Like Monday, we started at the lows, VIX is at 65, and then now we're at VIX in the low 20s. Markets rallying. Like, what is going on this week? And you know, to top it off with all that, Monday and Tuesday, actually, it was Tuesday and yesterday, the market faded after hitting highs of days, and then that just really got people conditioned. Like, oh, okay, so then sell in the morning and then buy in the afternoon, right? And then that way, just like do your swings, whatever, and then sell in the morning again, do it all over again. And that definitely did not happen today. Today was the complete opposite. And actually, I was listening to I don't think it was like paper game stream, but like a lot of the market live chatter on the Twitter spaces. And like they kind of expected the market to kind of pull back a little bit, the same as it's had for the past couple of days. Not to say that it was definitely going to happen, because those are traders and they got their stops and everything. But for like maybe a 6-month plus trader or a swing trader, myself, also with long-term positioning, I mean, sometimes it just scares the hell out of you. You know, like, let's start from the top. Actually, I got a little bit of an agenda going here, but to actually start off, I'm going to share a chart here of the S&P 500. Here we go. So on this chart here, this was last Monday. All right, this whole thing like fell off a cliff for the most part in the last couple of days before that, because of the yen carry trade was pretty much unwinding. And I'll get a little bit more into that later. But if we go all the way here from the top, in a matter of about 14 trading days, the S&P lost about 10% on the open on Monday. So if we actually go down here to the low of day, the S&P 500 was just short of correction territory at minus 9.59%. And I mean, what more do a lot of these bears want? Like, I feel like the amount of bears rumbling the table and shaking the table and pounding their fists and everything, like that was happening on Monday. And it got stronger and stronger before Monday, leading into this near 10% drop in the S&P 500. And it's like, it's as if like it's just not enough for them. Like they want to see like a 25% drawdown in the market. They want to see like a 30% drawdown, whatever it is. I don't, at this point, it's like, I don't know what they want, you know, like personally, I'm not a perma bear. Obviously I'm not a perma bear. I guess I would call myself a perma bull, because I do think markets go up 90+% of the time, and they are built to go up, because that's what I believe. I mean, you know, if you think about like all of these very rich, wealthy people in the world, like they have pretty much 80% plus of their net worth in the market, whether that's a stock market, whether that's in bonds. And when I say bonds, I don't mean like, you know, 6-month bonds or 2 or 1 month bonds, whatever. I'm talking about like actual bonds. Like they own the actual treasuries that they're loaning out to people. So a lot of them are long that. A lot of them have real estate. A lot of them have other types of securities. If the market drops down 30%, that's all going to get a haircut. And do you really think that all of these rich people in the world, powerful people in the world, because they have so much money, would let that happen? Because if they did, then COVID would have been the worst disaster ever, but it didn't. The central bank came in and they completely stopped it, put rates to zero, and start pumping money into the system, giving out all the checks and everything to everyone in the country, just to pump the economy up. And then here we are again today. I'm not saying that they actually did that, but the market was down 10%, and we're near that 50% retracement from the lows. Actually, if I go over here, take a look here. Actually, no, we're like about, well, that's kind of the inverse. Hold on a second. I would say like we're like about 4% from the lows on Monday morning. So an open to close today, we're up about 3.68%. That's a pretty big move in 4 days. And if you look at this price action over here, the next day on Tuesday, the market opened, it went all the way to the high of day, and then it pulled back toward the close. And then the same thing yesterday. It opened actually near the highs and went up here to the high day and just kind of faded back in like the last couple of hours yesterday. And today it's like people were expecting the same thing. And again, like I was kind of worried. I did not know what was going to happen today. And I, honestly, on Monday morning, I held my nose, jumped in, bought the dip, and then since then, yeah, I've been like kind of in and out a little bit of trades here, but for the most part, 80% plus my portfolio has really been long, just in long-term assets, maybe 2026 leaps, but for the most part, I've pretty much been long since Monday, and just hoping like I hope you don't go down because I don't know, and I think a lot of people don't know what's going to happen. Like tomorrow, the bottom could just fall off and we can make lower lows. But if we look at the VIX, like look at this freaking candle. This hit 65 on Monday, 65. And we weren't even 10% correction territory in the market yet. The last time this happened was all the way in COVID. The VIX hit 85. And since then, it has not happened. It didn't even happen in 2022. In 2022, the market was down 20+%. We were in a bear market, but it didn't happen in 2022. But it happened on Monday. We weren't even 10% correction territory. So like, what does that kind of tell you? That for me, that kind of tells me that it was literally max fear on Monday. And in order to understand it, you got to kind of understand like what is the VIX exactly? The VIX is measuring the volatility of the 30-day put options in S&P 500 or SPX. Right. So the more people that dive into puts and the more the market drops, the implied volatility of the S&P 500 on a 30-day rolling basis is going to keep increasing, and so will the VIX. And that's what happened on Monday. Literally, the market was down almost 10%, and that's when everyone dives into puts. And it's pretty crazy when you think about it, because that's actually the worst time you dive into puts after the move was already made. It's like the equivalent of basically buying calls in NVIDIA when it's at 140 plus when it opens that day at the all-time high. That's really the way that I would look at that. And I got a couple of other things here that I want to show as well. Oh, that's right. All right, so let's take a look at the Qs here. The Qs actually had a much larger drop than the S&P 500. The Qs had its all-time high closing. It was about 502. And the low day to the low day of Monday, it was down about 16%. Damn, 16%, like 16% on the Qs. Like that hasn't, like something to that magnitude has not happened since 2022. And handy though, like I'm not gonna lie, like it's pretty easy for the market to drop pretty considerably when the all-time high is like RSI is like 95 on a daily basis, and the weekly basis RSI is like 85 plus. Everything's overbought. You get like one little snap, like just one catalyst, and the market, the bottom will just fall off, and then people will dive into puts, people will sell everything. Because when you think about the way that the market dynamic works and all the psychology, is that over here last April, people thought we were going to go lower. Okay, you knew it, I knew it, everyone thought we were going to go lower on April 24. All right, and to be honest, again, I held my nose, jumped in the pool, and bought the freaking dip. And then it went up. People in disbelief, keeps going up. Okay, FOMO starts kicking in. People get in. And I know a few people that went long a bunch of stocks here around this level. They thought this was the low and the market was going to continue to go up. And it didn't. It went further down about 10% more. And I didn't think that was going to happen. A lot of people didn't think that was going to happen. And to be honest, that's what makes the market. When people don't think something's going to happen, the opposite happens, right? Like literally, if you think something in the market's going to happen, most likely the opposite will happen. And that literally is what makes the market today. I mean, if exactly what you expected happen in the market every single day, there would not be a stock market, because then there would be no edge whatsoever and everyone would be rich, right? But that's not how it works. The stock market will most of the time do exactly what you don't expect it to do. So I don't know, man. This week, the market was freaking crazy. That's just what I got for it. Yeah, I mean, you should have gone to TQQQ. You know, actually, I know there's a guy named Kris Patel who actually got a TQQ with Matt Farley. They have their portfolio going on. They got into TQQQ. I'm not so sure I think they got in a little bit early last Friday, but I mean, you know, how can you really time anything nowadays? The best you can do is just DCA in and just hold your nose and hope that it goes up at a certain point. But I will tell you, VIX at 65, that hasn't happened since COVID, and it was it's very probable. I'm not saying that it won't go back down, but it's very probable that we did see the bottom. Now, there's also the possibility that the markets might trend downward, but we are above that 200-day moving average on the S&P 500. So in order to continue with that bearish trend, it would have to sell below that. But today did kind of mark that day where it didn't just fade in the last couple of hours, like it continued to go up. So with that being said, there's a couple of other things here that I wanted to take a look at. This is the AAII sentiment survey. They do this survey on a weekly basis, and for the most part, they just ask people a question: what do you think the market's going to be in 6 months? And people either answer whether they're bullish on the market, neutral, which means that they don't know, or they're bearish. If you look at this chart, this basically shows the last 4 weeks of results here. The survey closed last night on Wednesday, August 7th, and 40% of the people were bullish. Now, compared to July 17, which was just 3 weeks ago, about 53% of the people that took this survey were bullish. Only 23.4% were bearish. Yesterday, 37.5% of people were actually bearish as well. And it's pretty interesting because if I go to the data here, let's actually go back here, April 24. So that was when we kind of had that pivot low, where it wasn't nearly as much of a magnitude drop as we had recently. But at that time, at that low, 32% of the people were bullish, 34% were undecided, and 33% were bearish. And then the market just picked up from there. And just yesterday, when it closed, 38% of the people were bearish. So more people were bearish as of yesterday who took this survey versus April 24. But more people were bullish yesterday versus April 24. So, which means that today or yesterday, a lot less people were undecided versus April 24, where a lot more people were undecided. So there still is a little bit of that recency bias, in my opinion, focusing on the market psychology. What I'm really gathering from this survey is that people are not really undecided on where the market's going to go. Overall, out of the entire survey, since 40.5% of the people think that we're bullish, meaning that they think the market's going to be higher in 6 months versus today, overall, people tend to be a little bit more bullish on the market. I'm sure if they took this survey and it ended today, you'd probably see less people bearish and more people bullish. So, you know, it really is kind of hard to tell. But from the sentiment of the survey, there really is a big division between people that are bearish and people that are bullish versus April 24. There was a bit of a division, but generally it was pretty even across the board, whether somebody was bullish, undecided, or bearish. And in addition to that, I actually also took a survey on the Discord the other day. This was actually on Tuesday, and actually closed this survey the evening of Tuesday. And thank you for everyone who actually participated. But I took a survey. We got about 136 participants, and I wanted to get it on that day because that was the day that after the VIX was at 65. But people were much more undecided, it seemed. At least that's what I thought. But what it came out in the survey was that, do you think there is more pain in the market, meaning a lower low? So at that time, let's see where the market was at on Tuesday. So that day, on Tuesday, it opened and the market closed about 0.92% higher. But that was the first day of the two, where the market went up and then faded in the last 2 hours. As a matter of fact, actually, it looks like it happened on Monday. You know what? Let me actually do the 30-minute chart here. And sorry for the noise in the background. Again, with the AirPods, like there's really nothing I can do about that. At home, you'll get a much better setup. But yeah, so this was the low on Monday. And then we went up to the high of day around 523 in the SPY, and then we pulled back to 516. So that on ES or SPY or S&P futures, that would be about 100% move. Sorry, 100-point move. And then overnight, we had the rally, which we have kept seeing overnight. And then in the morning, it would kind of fade back, but then it would pick up. So it went from 518 on SPY all the way up to 529. So it made a higher high on SPY. And then that night, it actually pulled back. So this is around the time when the survey was closed. Probably this is in Eastern time. So SPY closed here. Well, let's just say it's like around here. Okay. So SPY was pretty much at 520. All right. And then this survey, basically 51% of the people in the Discord, they actually believe that there was more downside on the market. And about, let's see here, 24% thinks that we just had our lows. So about 24% were bullish on the market. And then choice C was undecided. I probably should have done the same type of choices that the AI survey had. So it would be like bullish and then undecided and then bearish. But for the most part, about 51% of the people thought we were going to make a lower low in the market in the near term. And for this, I didn't really give an idea to people like 6 months from now, sort of, but just kind of getting the sentiment. And yeah, it did appear that about 51% of the people that took that survey thought the market was going to make a lower low. And clearly it has not since then. Though, this morning, actually on close yesterday, that was scary as hell. Like I thought it closed yesterday like, oh shoot, maybe I shouldn't have bought the dip so much. Maybe it's going to make a lower low, but it didn't. It kept going up, thankfully. And then of course it did the rally overnight, and it held. It just continued to trend up pretty much most of the day. So with that as well, there's also the fear and greed index on CNN. This one is actually more indicator based and less. There's actually no survey in this one. It's just based on market movements. We're still in the extreme fear zone at 24. And actually, what's pretty interesting is that if you look at the timeline here, October 2023, which is when we had that 10% correction on SPY. We are actually still, we're about 22% was the most fear that was priced into that market according to the CNN Market and Fear Index. Yeah, we had 24 today, but on Monday it was actually at 16. And again, we weren't even 10% down. Like there was a lot of fear in the market. I guess like when the market is just going up like almost every single day, it really doesn't take that much to scare the F out of people. But anyways, that pretty much is with that. I know there's like a lot of narrative about the Japanese yen carriage rate, and I'll talk a little bit more about that in a few more minutes. But the last thing I really want to look at over here is the Fed Watch tool, which is basically the probabilities for the amount of cuts and hikes, which in this case is really just cuts for the next Fed meetings. And looks like over here for the FOMC meeting in September, we now have a 56.5% chance that there will be 2 rate cuts. So currently, the target rate that we have right now is 525 to 550 basis points, or 5.25% to 5.5%. And there is a 43% chance that we're going to get 1 rate cut, which means just 25 basis points. And there is a 56.5% chance we're going to get 2. On Monday, this thing was 78%. I think it was actually, yeah, it was like about 78% on Monday. This is a week ago, but on Monday, I remember this specifically, this is about 78%. So it looks like since Monday, and yesterday we were at 31%, today we're at 43%. Sorry, today we're at 56%. I don't know, this thing's weird. Oh, I was reading it wrong. My bad. A week ago, we were at 22% for 2 rate cuts. Yesterday, we were at 69%. Today, we're at 56%. So it looks like they're kind of pricing out the amount of rate cuts they were pricing in earlier this week. I think we had about 4 rate cuts. Actually, let's check this chart out over here for December. So in December, I can't go to Monday. I can go to yesterday though. And yeah, so 425 to 450 on December for the target would actually mean a total of 4 rate cuts this year. So there's a 45% chance of that. And still today, there is actually a 47.1% chance we're still going to get 4 rate cuts. For 5 rate cuts a day ago, it was 33%. Today, it's 25%. And then you got this 4% over here for 6 rate cuts in total this year. See, surprisingly, also, when we started this year out, the market was pricing in 6 rate cuts, right? And then everything fluctuated. I think for a minute, the market did price in a rate hike. But right now, we're at 4% rate cuts. Yeah, I wonder who got into TQQ last week. But anyways, yeah, so it's still 4 rate cuts. That seems to be the dominant probability by the end of the year. So we're actually looking at 2 rate cuts in September. Oops, sorry, that lagged for a minute. 2 rate cuts in September. We're looking at, interesting. So if we do, we're looking at getting a 52.6% chance that by the end of November, FOMC will have 3 rate cuts. And then by December, we're looking at about a 52, sorry, hold on, that's still on that one. Oh my goodness, what is going on here? It's not loading the right one. I guess this is what happens when you remote into your computer 2 states away. Anyways, I think it was about a 50% or 40-something% probability that we're going to get 4 rate cuts. Here we go. So let me go to December. Yeah, there is a 47% chance we're going to get 4 rate cuts by the end of the year. I mean, we'll see what happens, man. I mean, it really depends on the economic data. The Fed is data dependent, but it's kind of sounding like Powell was a little bit dovish during the last meeting, and we're most likely going to get at least 1 rate cut in September. So there is that. So now what I wanted to do is I wanted to move on to the next segments, which is basically like where are we going to go from here? Are we going to go back to all-time highs? I mean, if you ask me, I don't think we're going to go straight back to all-time highs like a V-shaped recovery. Like probably we're looking at maybe further volatility or choppiness until October at least, in my opinion. Statistically, markets don't necessarily rally after a first rate cut. They usually pull back on a first rate cut when they actually do the rate cut. Like they rally into the rate cut and then they pull back when that rate cut happens. But that pullback is pretty shallow. It's sharp, but it's shallow. So what I'm thinking, if I really had to guess, is that we're probably either going to chop, maybe we'll make a higher low. So I would guess maybe this week or next week we'll kind of drift back a little bit, and then maybe rally a little bit, make a higher high, continue trending up, higher lows and higher highs. But when they do, as we do get closer to that meeting in September, we're probably going to rally a bit from here into that. And then when they do that rate cut, do that crazy FOMC moves that we see all the time, and then pull back a little bit, and then possibly rally into the end of the year. There is a bit uncertainty in the market when it comes to the direction we're going to be headed in. So I would still think that the VIX will stay above 20. And if you follow me on Savvy Trader, you could see that I did close that SVXY position because it's very hard to determine where the VIX is going to go. Yes, I mean, in the long run, you want to short the VIX in the long run because the markets are built to go up. But at the same time, like it's the equivalent of pretty much going long the indices or going long SPY or QQQ. So I would rather not really pay too much attention to the VIX in that part and just assume that, we're probably going to chop until then for the next couple of months. And then once the market sees what the Fed's going to do, once they show their hand and Powell talks in that FOMC in September, might give some light, take some uncertainty out of the market. It'll do its thing probably for a few more weeks, and then it'll probably just continue to go up toward the end of the year. Now that is assuming the market is happy with the winning candidate in the polls. I'm not going to be political and just say like, okay, the market loves Trump or the market loves Kamal or whatever it is. Like, honestly, for me personally, whoever's president is whoever's president, because whatever happens is going to happen. But in terms of the stock market, right now, the stock market did like Trump, but what I've seen, actually, let's bring up the polls. Now, this is pretty hard to tell because I don't know exactly which site will tell you, give you a pretty good view of who's winning in the presidential polls. So if I just search here, someone was pointing out that there's like a Vegas style of like betting on like who's gonna be president. Like I don't know. I can't believe people like actually vote in people actually like betting that stuff. But hey, we are the most degenerate country in the entire world. So it looks like over here that Harris is actually leading the polls 45.4%, and Trump is at 43.3%. And if we go all the way back here, actually, can I go further back? Let's see what's going on here. Okay, I clearly do not look at this that often. But what I do recall is that when Harris was first, or when Biden stepped down from the race and Harris took over, I remember Trump was in the lead. And now clearly, according to this, Harris is in the lead. I mean, I wouldn't say that the market really cares too much about this right now because the focus does seem to be the yen carry trade and what the Fed is going to do and everything. There was a time when the market did care about this, and when the market was so volatile and like every single thing that the president said and whatever Trump said, it was like whatever. But today, it really seems like they're not so much focused on this. But mind you, there will be a day when this starts to come back in the picture, okay? But like right now, it's all about the Japanese yen carry trade. It's all about the bonds and the auction, whatever. And to be freaking honest, like that's just the narrative that people like CNBC and people on Twitter are just looking for an excuse. Well, the market's going to do whatever the hell it's going to do based on the sentiment and positioning. And so far, from what I've showed, your green index, like generally, it's I would say it's a little bit leaning more toward bullish. So it's pretty possible that we might end up just grinding higher from here. Because the sentiment that I kind of see on Twitter is that people think we're going to make a lower low. Again, I still don't see that happening, given that we don't have some catalysts. And if I go over here to, let's see, if I go over here to crypto, I mean, crypto's certainly catching a bid here. I don't know if you guys have been looking at crypto, but this thing has just been grinding higher. From the lows it had. I think it hit like I think it went into the 40 handle. Yeah, it went into like as low as like 49,000, and then now went up about like 15-20% from there. I mean, that's pretty crazy. Crypto is like what yield curve, what yen carriage rate. I'm just gonna rally from here, man. That's just what it seems like crypto is doing. And you know, for a little bit, I was kind of bullish the miners because I used to think that they were like a pretty good proxy trade to crypto. But probably in like the last month, I'm just like, you know what? It's very hard for me to stay in the miners when I see crypto making a 20% move up and the miners staying down. Now, handed, I'm not like such a huge wheeler. I think if you wheel stocks, if you like to wheel and sell premium stuff, the miners are probably a good place to play with like a certain percentage of your portfolio. But to be completely honest, like I don't have the stomach for this. Like the moves that these miners make are crazy. Like I literally don't have the stomach, and I don't have the balls to do it. I mean, you guys got some steel balls doing this thing, but I can't do it. So kudos to you guys. But as far as the hard assets themselves, like Bitcoin has just been rallying up. I know Paper Gains is pretty bullish on Ethereum. I'm very bullish on Solana, and it does appear though that if I look at the Solana Ethereum chart, there was a bit when Solana was outperforming Ethereum, but that has pulled back earlier today, and Ethereum has been pretty much the dominant crypto move for the last 24 hours about. If we look over here on the Ethereum chart, since the low that it had yesterday, Ethereum is up about 16%. If we look at Bitcoin, since the lows on Wednesday, Bitcoin is up about 14%. But if we look at Solana, I don't think it's actually as good as Ethereum, but it's probably outperforming Bitcoin. Yeah, Solana is up about 14.5%. So we'll see how that goes. And I generally do think that if you really consider risk in the market, I generally do think that crypto is like a pretty good feel for how risky people feel in the market, because I don't know, there's fundamentals about crypto, but like honestly, if you're buying crypto, you're just hoping the next person is going to buy for more. That's really all you're hoping for with that one. I mean, you can have all the fundamentals you want, but when it comes to crypto, they don't have earnings. There's really like no one really knows exactly where this thing is going. Like you just hope the next person's going to buy it for more for the most part. But yeah, I mean, for the most part, markets have been up since Monday and back to all-time highs eventually. Not tomorrow, probably not next week, probably not in September, but maybe in October. We did have that craziness in 2023 where the market just like ripped off from its lows. So we'll see, guys. We'll see. And what do I got here on the next segment? So I do have here some moves that I have made. I'll just point this out actually in the chart. But first, before I go into that, James Byrne asked, would you buy CCL over RCL? Okay, so I know there's like a bit of, there's been a bit of talk about this on the Discord, especially from Kris, where, I mean, for the most part, bullish all the cruise lines. Yes, I am bullish all the cruise lines. I am bullish on travel. I did build a core position in Booking.com. They did have pretty good earnings lately, but of course, the market will just look at its bookings, which you saw on like Airbnb. Airbnb showed that bookings decreased. Booking.com obviously did. And let's actually take a look at Expedia today, because I know Expedia reported after hours today. Yeah, when it comes to the travel industry, for the travel industry, they're all really going to move together. Like, it's very hard to determine, is RCL going to move up and CCL and Norwegian is going to stay down. Like, they're all going to move up together, but RCL is definitely the favorite amongst them three, mostly because it has the least amount of debt and has the highest. It has the highest profit margin. So that is much favorable in Wall Street. Let's look at these quarterly results for Expedia. Okay. All right, so this is Expedia earnings release. And gross bookings is up 3% year over year. Let me go to FinChat. I'm going to take a look to see what their metric has been for this one. Did I go to the right one? Yeah, I did. 1 second. All right, so let's go to their segments of KPI. Here we go, gross bookings. All right, so I'm going to go by quarterly, and then I'm going to basically see the percent change for gross bookings. So gross bookings came in at 5.5% year over year this quarter for Expedia, 2.6% last quarter, 5.7, 7.1. If I take a look actually at the chart here, we can see that, you know what, I'm going to remove COVID from here because those were just some outliers. I'll start in June 2022. All right, so we can see here that gross bookings year over year increases has been trending down over the last couple of years, but Expedia did increase their year over year gross bookings, which is actually good, and that does kind of make sense because they're up about 12% after hours. For Booking.com, Booking.com is probably one of the largest travel companies in terms of bookings versus Airbnb and Expedia. And I know there's a lot more, but Booking.com actually, they used to be Priceline, and Priceline did acquire Booking.com, and then they rebranded themselves as just Booking.com. And Booking.com, they own they own more than a few companies. They've done a lot of acquisitions, but for the most part, I think a lot of you guys heard of Booking.com. Very heavily used in Europe, as well as their other application, agoda.com. That's very heavily used in Europe as well. But for the, hit that button, chat. But for the most part, this guy clicked on that one. But for the most part, Booking.com really is the strongest one out of all three of them. So I decided, because since I'm bullish in travel, I am definitely bullish on Booking.com versus those three. But if you look at the total gross bookings of Booking.com year over year on a quarterly basis, yeah, they went from 10.4% to 4.4% last quarter. So that would actually explain why Booking.com was down about 10% in the last earnings. Let's look at Airbnb. From what Sam was talking about the other day, it did seem like Airbnb did compress their gross bookings percentage year over year. Airbnb total, they don't have an exact metric here. Gross bookings value. I guess that's probably the best I can look at for now. Airbnb is a much smaller company, so definitely their year over year percentage increase is going to be much greater than Booking.com. But yeah, they did contract their percentage increases year over year for gross bookings. So I guess Expedia is kind of telling a different story. But one thing to remember is that Airbnb and Expedia, a lot of their business is focused in the US. Booking.com, a lot of their business is focused in Europe. But Booking.com, what the CEO was saying was that he's going to look to expand further and invest more in short-term home rentals. So he's looking to compete in the US. So he's looking to compete against Airbnb. He's looking to compete against Expedia. But for the most part, they really want to get some of the market share in the US market. So, you know, if you think about how much market share is available in the US markets in terms of travel, there's a lot of growth behind it, probably reached its sentiment low. I think all three of them are poised to do better. But if I really think of safety in terms of this entire industry and what I know the most in the entire bookings industry, I would go with Booking.com. That's one that I know the most. It's the largest one out of all of them, and probably the safest one. So Booking over CCL. So, I mean, I can't really tell you which one's better because these are two pretty different companies, right? You have CCL, Carnival Cruise Lines is a cruise company. Booking.com is kind of like an agency. Like they don't own these properties. They don't own any of the cruise ships, but they help you book it. And Booking.com has already expanded into airlines, car rentals, and so on. So Booking.com is a very big entity, especially when you compare it to Airbnb and Expedia. Expedia, you could do the same thing too, but Expedia is mostly in the US. CCL is cruise lines. Like you can't really compare those two. Yeah, TripAdvisor is good too. I don't even know if they're public though, but TripAdvisor is really good if you're looking at travel forums and want to get people's intakes and stuff. But overall, I think Booking.com, they really aggregate a lot of that data into one platform. So it really makes it a lot easier to use their platform. So I'm not here to sell Booking.com, by the way. I'm just bullish Booking.com long-term. This is a core holding for me. I'm going to hold it for a long period of time, and I'll probably add if it continues to go down further. But for the most part, I think I built my long-term position on it. Talk about Airbnb as well. So, I mean, again, I don't know too much about Airbnb. A lot of guys really talk about it in Discord, especially Sam. But I mean, if I want a company that is much bigger, is more diversified in terms of their income streams, has more international exposure versus just US exposure, could probably survive a recession if you do get one. I would pick Booking.com, but you know, if you're younger, you want to take on more risks, you know, the fundamentals more, you know, Airbnb more, then yeah, go with Airbnb. I think Airbnb is going to do great over time. It's just, you know, I mean, I don't really know it. Travel is really not my field when it comes to bookings. So I'm not really gonna, you know, put that much time and effort into it. Did I get the Booking.com play of Joseph Carlson? Well, if I did, then I would have bought Booking.com when it was above 4,000 and I'd be down 20% from now. Handed, he has a little bit of different mindset from what I do. I invest in a lot of software stocks, and I'm pretty sure Joseph wouldn't even touch those. Did I get the idea about it from him? Yeah, kind of. I did get the idea about it from him, but you know, I don't think. I think everyone bounces ideas off each other. Did I buy it because he did? Again, if I did, I would be down 20%. So, you know, we'll see what happens with that. I'm bullish travel, so I'm buying Boeing. I mean, okay, you're kidding. Okay, good. I was like, really, ETF? You bought Boeing? Like, okay. No, but you didn't, so clearly. Yeah, I mean for sure, Dex. I mean, I know you're less about the very risky trades, more about the safe ones. Speaking of which, Dex, I did get back into Nubank in the mid tens, and it was freaking great because that company has been straight up since there. I've been waiting to get back into Nubank. I sold Nubank actually in the low 12s and high 11s because I wanted to add more to Mercado Libre, and since I would think like Latin America it's probably the same thing. But the whole time, I'm just like when I see a thing in like the 1350s, like I don't know if you guys know Dex pretty well, but like I don't know, man. It's just I just don't want to see that guy win. Like I don't want him to win without me. So I'm glad Nubank had its pullback, so I got back in there. I've been bullish Nubank for a long period of time, and I've held it since the low sevens and high sixes when it did have that pullback last October. And then I've been really, if I could pick like one company to invest in for a long period of time to go full port in, it might be Nubank. I mean, it's just their trajectory and their expansion in all of Latin America is very similar, but not over. Well, it is kind of overlapping the market with Mercado Libre. But Mercado Libre, a lot of people say it's like the Amazon of Latin America. I generally don't think it's the Amazon of Latin America because the Amazon of the US is not e-commerce mostly. It is AWS, and AWS is a cash cow. Without AWS, if you take Amazon and you take out AWS, I would never hold Amazon. Like it is a decent margin business, but it doesn't have that high growth rate, high margin, high profit margin that AWS has. And it's a very volatile, it's a very cyclical shopping and e-commerce online. It's a pretty cyclical industry, right? It's like people generally buy a lot during the summer and they tend to like I don't know exactly what the seasons are, but it's like there's periods of time when people buy a lot of stuff of Amazon and there's periods of time when they don't, and it's not easy to predict that because a lot of that is really dependent on the consumer. A lot of it is B2C, like it's business to consumer, right? Like I'm pretty sure like Microsoft isn't buying like a million Chinese products from Amazon. They're probably going straight to the manufacturer, so like it really is dependent on the consumer and the consumer sentiment. If you think of AWS, right, it's like their main customers are these gigantic organizations. So it's not as cyclical. Like these gigantic organizations, what is it, like 90% of 90% of companies are not in the cloud yet. They're still running on-prem stuff. So that's like a 90% TAM untapped when you think of cloud and hyperscalers. So then there's Amazon or AWS, there's Microsoft Azure, and there's GCP, Google, right? So now if you think of Mercado Libre, going back to Mercado Libre, they have the e-commerce piece, but the thing is that they have barely any competition in Latin America. There is competition in Latin America, but the competition does not have the infrastructure, does not have the technology, and does not have the moat that Mercado Libre has in Latin America. So, again, Mercado Libre is one of my biggest positions. I already built that out before this drop happened, so I don't have much room to add Mercado Libre, and I'm not really looking to trim into Mercado Libre. Nubank in the same position as well, where there's a lot of untapped market in Latin America. Right now, Nubank is really trying to grow their credit market in Mexico. And if I recall recently, I think it was today, Mexico did continue to drop their rates, which does give Nubank that edge because they do offer a much higher rate than what treasuries or whatever it is, bonds are paying in Mexico. So, we'll see next week. Yeah, I hear you, man. You want to buy more, but if I recall, you got in at a pretty low, at a good cost basis there. So you should be pretty good. But yeah, earnings next week are going to be pretty big. I'm bullish Nubank as far as the earnings go next week. We'll see what happens. I mean, I'm not going to go over here and gamble as to what's going to happen with Nubank. So we'll see what happens. Another thing that I did pick up were spreads in Robinhood, and I mean, Robinhood really it does correlate. A lot of the price action really does correlate with how crypto is doing, and we see that there's a pretty big recovery in crypto. And the more crypto trading there is, the more revenue that Robinhood is going to get from its users because it takes Geez, I bought like the most degenerate thing that I did recently was buy Shiba Inu or SHIB USDT, and I bought it on Robinhood, and I bought it the other day, and I've like been in and out, trimming a little bit, buying a little bit, trimming a little bit, but for the most part, like this is the most degenerate thing that I could possibly do when I'm bullish crypto right now. Um, I already do have my core Solana position that I really haven't touched lately. But yeah, I mean, crypto's pulled back a little bit. And like I showed you in the chart before, it's just been really like rallying on the back of the market. And it's ironic because like no one's really talking about it that much. But like I guarantee you, when that thing hits new all-time highs, probably in a couple of weeks, people are going to be like talking about that on Twitter. You know, so it's better to get in this stuff when like no one's talking about it and when no one wants it versus like when people actually want it. I added to my leaps on Sentinel-1, still bullish on Sentinel-1. Sentinel-1 is a cybersecurity company in the endpoint management space. They're a big competitor against Microsoft. Microsoft Defender, if you guys have ever heard about that, it's that stupid little app that's on your Windows computer that just takes all your resources and is annoying as hell, bugging you. Yeah, anyways, that's one of their biggest competition. And CrowdStrike, of course, which I think a lot of you guys have heard about CrowdStrike, you know, that is that one company that caused a massive IT outage around the entire world, that company. That actually saw a bit of recovery today. Let's actually take a look at that chart. CrowdStrike. Here we go. Yeah, so this thing had quite a bounce, actually. If I recall, on Sunday night when everyone was worried about the yen trade, I looked at CrowdStrike. This thing was sub 200s. Sub 200s is a damn good price for CrowdStrike. I'm not going to lie. I didn't get in mostly because I think its upside is still a little bit limited. I do not think CrowdStrike is getting up to 400 again. When it was trading at 400, it was trading more expensive than Palantir right now. That's how crazy that was. And it doesn't have as much of a retail following as Palantir. Right now, Palantir is one of the most expensive cloud stocks out there. Don't argue with me on that, guys. Like Palantir, and these are just facts. Palantir is one of the most expensive cloud stocks right now. Given though, I did get back into Palantir, so I'll just pat Garcia on the back for that one because that guy is like one of the biggest Palantir bulls that I know besides Amit. But to be completely honest, I didn't buy in. Cool, you added Palo Alto. So Palo Alto is actually not well, they do have products in endpoint security management, or basically the application you install on your mobile devices and your computers and whatever. But their main market really is enterprise security or SaaS, which Palo Alto is one of their biggest competitors would be Fortinet or Zscaler. But for the most part, again, all these industries really move together as a unison. Like CrowdStrike won't be up like 30% and like everything else is like down like 20%. Besides that one incident where CrowdStrike was down like 25% and then Sentinel-1, all these crazy cybersecurity companies rallying. But I am bullish on Sentinel-1 because one, they're non-profitable, so a lot of Wall Street cannot buy them right now. And two, it doesn't take that much market share for them to steal from CrowdStrike in order to make a huge difference on their top line. Right now, they're growing about 35% to 40% year over year in revenue. And I think they make up about $180 million a year. Actually, I don't even know why I'm guessing this right now. Let me just look it up. It's like, why am I like saying this stuff off the top of my head, guys? It's just showing the damn chart. And of course, the thing doesn't load when you really want it to, making me look like an idiot in front of 31 people. Wow. Come on. It's crazy. I could like remote into this computer and get like no latency, but it can't even load a damn page. All right, so year over year. What's up, Zoe? What's good, man? How you doing? All right, so Sentinel-1 recently, yeah, they're like 40% year over year TTM. I mean, it's a small cap, so it doesn't take a whole lot for them to move the needle. And like when you really think about it, Sentinel-1 is at 186 million last quarter. Okay, so trailing, let's look at trailing. Trailing, they're at 674 million. Okay, trailing 12 months. Let's look at CrowdStrike. You know, let me actually put this up in a different one. CrowdStrike. trailing. Boom, boom, boom. Okay, CrowdStrike's at 35%. They did make 3.284 billion trailing last. Why do I not think that's right? Anyways, 3.2 billion. So 3,284 million last quarter trailing. Sentinel-1 is at 674. So that's like 1/5 of CrowdStrike. If CrowdStrike loses 10% of its customers, and I'm not saying it's going to happen, it might not happen, okay? But given the sentiment and the surveys that have been going on from ETR, I don't want to get into the whole thing, but there's been surveys that were done right after the outage happened. And a lot, I think it was like about 50% of the people that got impacted by the outage. So if you take all the people, let's say 90 people got impacted by the outage, 50% of them were actually reconsidering, like, we don't want to not get away from CrowdStrike, but we don't want to be, we want to diversify our cybersecurity belt. Okay, we don't want to depend on this one company, because then it would impact us just as much as it did for a lot of people on July 18 or July 19. So some companies, they might be like, well, then let me just keep these 2 products from CrowdStrike, and then I'll get these couple of products from Sentinel-1, which they have very good reviews. They're the 3rd best in its business. So it's like, let's just diversify a little bit. I know Sentinel-1 has better prices too, so it's like, let me just diversify a little bit. It doesn't take, let's say CrowdStrike 10% of its revenue goes to Sentinel-1, okay? That's like best case scenario, because I don't think that's going to happen anytime soon. But let's just say it does. 10% of its revenue is 320 million, okay? Sentinel-1, 320 million is 50% of its revenue. That's a lot of money to get out of nowhere, right? And instead of growing 40%, 42% year over year, okay, they're going to grow a phenomenal amount after that. Again, I'm not saying that that's going to happen. I'm just saying that it doesn't take much to move the needle for Sentinel-1, for CrowdStrike, as it does. So it doesn't take that much money for CrowdStrike to lose to make a big difference in Sentinel-1. And even if Sentinel-1 doesn't get all that flavor from CrowdStrike, even if Microsoft gets a lot of it, which they probably will, just a little bit will make a very big difference for Sentinel-1. So that is why I'm very bullish Sentinel-1. And even long-term wise, like, it doesn't even matter. Like, I think all cybersecurity is going to do great, and Sentinel-1 will continue to take a little bit of market share, but definitely bullish Sentinel-1. What else did I buy? I'm spending a long time in this segment, but I just want to talk about this one a little bit more. I opened a starter position in Rubrik. I did have a YouTube video on Rubrik. If you just want to go to my videos list, you can go ahead and check that out. And I had a starter position in HIMS. HIMS are keeping a little bit on a leash there because, it just has negative sentiment surrounding it. And this is more of a swing trade for me. I don't know the company too well. I'm more based on technicals. I do think that it might bounce a little bit, but again, it's a very small position, like less than 0.5% of my portfolio. So it's not really a big deal. Rubrik is a cybersecurity company, but it's not even a competitor to CrowdStrike or PanW or whatever it is. So it's its own sector. I bought back some short positions from the spreads on CCL. So technically I did add more to CCL. And I got the spreads on Hood for 2026. So I got some time on that one. Again, that's more of a technical bounce and as well as a bullish crypto trade. And I converted a lot of my Tesla shares at TSLL. Call me a little bit degenerate, but I don't want to get into a whole Tesla trade right now, but I definitely do think they made a pivot low recently in the low 190s. So that being said, the next thing I wanted to kind of talk about is the yen carry trade. Okay. Should I explain how the yen carry trade works? Because I feel like a lot of people have killed that explanation on Twitter. In a nutshell, basically, the Japanese yen is a very low interest rate yield, like 0%. So what a lot of these big hedge fund money people have been doing for the last couple of years was that they were buying the yen, okay, and then they were converting that money into US dollars and then buying US treasuries with it. So they would technically use that arbitrage to get like an extra 4 to 5% on the yield, right? So the thing with that is that some people got greedy with that yen carry trade. So they had the treasuries And then they use the treasuries as collateral to buy risk assets. Okay. Now the problem with that is that when the yen takes when the yen rallies, that means that that spread between the yen or the Japanese bonds and the US bonds, that spread goes down. So that means they'd have to convert their money back into yen, lose money on that conversion and that trade. But in order to do that, they had to sell the US assets to get their collateral back to be able to buy back the yen, which was actually causing a little bit of a short squeeze on the yen itself. And that is what they say is the reason why there was such a huge meltdown of the markets, because there were so many damn dumb rich people that were taking advantage of this arbitrage. And whenever a lot of people get one side of the boat, it literally doesn't take that much for the whole thing to collapse. Fortunately, though, it didn't collapse any further than it did. In my opinion, I think there was a lot happening in the background with the governments and central banks to make sure that that didn't happen. And that's the reason why I think the yen carry trade is pretty much over. I think it ended when fear and VIX was at 65, because I'm pretty sure that those morons who took advantage of that arbitrage and bought risk assets with the collateral on the treasury yield bonds that was taken from borrowing money in yen, bought puts to hedge their bet so that way they could decrease the amount of losses that they would make. The problem with that is that everyone got bearish on Monday. Everyone bought puts, and that's why the VIX was 65. And then that then caused people to panic and sell all their shit, right? And when everyone sells everything, no one can sell anything. So the only direction is up after that, and everyone buys that stuff. I don't know if that's actually what happened. That's just a theory. But I really do think that the bottom was in on Monday. As far as right now, it can continue to trend down. It can. And I'm not making predictions exactly what's going to happen, because I'm not going to guarantee what's going to happen. Actually, I did make predictions earlier on what's going to happen, but I'm not going to guarantee what's going to happen, because anything can freaking happen. So, we'll see what happens with that. Holy crap, I've been live for about an hour. All right, so that's it with the yen trade. And I was going to actually get into earnings for a little bit, but I did have a hard cutoff at 6:30 Denver time. So I guess that's it. Well, thank you for coming, guys. Thank you for watching me. Thank you for the 31 people that came. Again, the whole like and subscribe, but yeah, go ahead and like and subscribe. I'm going to probably make more videos on this depending on the viewers on it. But yeah, guys, thanks for coming. All right. Peace.